we have next up our gold sponsor, PearTree, who are one of the pioneers of what you can do with flow-throughs. They brought to the market a very powerful model that combines philanthropic giving with flow-through share structures. And I'm really happy to be joined by the founder and the CEO of PearTree Canada. That would be Ron Berbaum. Now, Ron is going to be here today to talk to us about government relations and tax presentations. This is all about a call to action. Now, Ron himself, he has an extensive background in law, tax, and finance. He's blended his ability for recognizing, structuring, and implementing innovative, yet at the same time, conservative financing structures with a lifelong dedication to supporting philanthropic causes. Amongst his accomplishments, Ron has structured and created an investment fund listed with the Hong Kong Securities and Futures Commission, a REIT listed on the American Stock Exchange, and a family of tax-efficient mutual funds for investment dealers. As early as 2004, Ron presented the use of flow-through shares to philanthropists and charities as a way to reduce the after-tax cost of giving. Ron has the ability to produce tax-efficient financial products that meet both the policy and technical requirements of the tax legislation, and he was a driving force in the first flow-through donation transactions, the first CRA ruling, and the first Revenue Quebec ruling. Quite a storied career, Ron. It's wonderful to see you. It's been too long with this big COVID thing that we're all coping with. How have you been doing?
We've been well, and I'm also proud of the fact that I figured out that I could actually tie a tie. I thought I would do that today to see if I can achieve that.
That is, I'm honored that you put a tie on, Ron. I don't know if I've seen you in a tie before. You usually.
I'm not sure either, but I thought I would see if I could remember it. So here I am. We've been well, thank you. We've been busy, and we're looking at the next year as being really interesting. New government or an old government with more horsepower behind it. And today I just want to, in 7 or 8 minutes, talk about what we're seeing in both the flow-through regime and things like capital gains inclusion rates and how that have an impact on flow-through, as well as talking about what we've seen it with CRA. So basically, those are the two topics for 7 or 8 minutes, and a couple of quick questions. But we're and then maybe just a little preamble in terms of our own business. It's been a stellar year. We're now 30 people across the country. 15, 16 years old. We're close to 500 million of flow through for the year, driven by some very large deals. And so I guess the 2020 and 2021 started out with Cisco Developments with a $70 million deal, a Great Bear with 60, and a transaction in Calgary for 60. And it's been a very, very busy year for us. And we source all those shares in a format, as you know, that helps philanthropists by buying the flow-through shares, immediately donating them and selling them anywhere in the world, including in Geneva, stripped of tax value. So we figured out a way, as you know, to capture the tax value and reflect it as a discount to market for global investors. And as a result, more and more global investors have participated in our transactions. Some years, it's more than 90% of all the buyers are non-Canadian. It's been a year of change in that we've done everything from offerings on the Australian exchange, which means we have a night shift led by Lisa Davis and Ricky Chan. But it's an interesting time where Canadians are subscribers. We subscribe for shares that are listed on the TSX or the Australian exchange. Then bought at the other end by Australians. So it's a very we've seen that expansion. Lisa Davis tomorrow will be talking at greater detail about the expanded use of flow through for global investment. With our little byline, expanding the universe of exploration capital, and it's very true. Having said that, we're still looking for another 150 million of flow to end the year. So if any one of the people that are looking still to do a financing this year, we're operators on duty. So just go to our website, PearTree Canada, and just call either Ricky or Gary or myself or Lisa. Away we go. We're talking about two things today. So, and I'd like to put it up on the screen now, if I may.
Yes, please do.
And just talking about now. I guess I have to share my screen for a minute. I guess I'll just put it up here. Hopefully this works. Well, whoops. Let's see if that works. Let's just see. Maybe it's.
There's a button at the bottom. Yeah, you look at you, Ron. You got it. Perfect.
Got it. Is that done? Are we done?
Actually, if you could just enlarge it.
I can. Got Laura talking. 1 second.
It is.
How's that? Does that work?
There we go. Yeah, now you can just play it and we're good to go.
Okay, so hi. So 7 minutes, two topics with one preamble. So we're now 30 people. We're doing close to $500 million a year in flow, whereas we've seen transactions this past year doing sub-receipts and a shelf prospectus, which was a bit of a challenge on a 5-day close, and the foreign listings. And those items will all be addressed tomorrow by Lisa Davis, who drives that side of the shop, and that's in another 10 minutes of discussion. There are two calls to action in this presentation. One is a petition that we launched last night, which we'll talk about in terms of capital gains inclusion rate, and the other one talks about what we're seeing with CRA and what to be aware of. One call to action is please sign the petition and distribute it if you could, because it's all in our best interest. And the second item is that with respect to tax and what we're seeing with CRA, and in that respect, we are doing yet another one of our seminars on December the 7th. Just put it in your book and you can register online. And for those, it's designed mainly for CFOs in the exploration space, but and it's also, you can use it towards your professional development time. So as we know, first of all, the Liberal budget, not the Liberal budget rather, but the Liberal platform said specifically they will eliminate flow-through shares for oil and gas. That's a certainty. That will be gone. Recognize, and this is advice that we've received from our own Government Relations Council, the GR folks are telling us, this government is here for the full term. It doesn't need both parties to sign off on any one piece of legislation. They need either the NDP or the Conservatives, but not both. So we're going to be living with this government, I think, we all think, for a long, long time. So oil and gas flow-through shares, next budget, next economic statement, almost a certainty. The other certainty is that we're taxing the rich. I don't think that's anything that's very surprising. And when we look at capital gains inclusion rate, we've heard about this for a long, long time. It's bound to happen. Recognize that in our business, we deal with high net worth and uber high net worth people who buy flow through shares just for the tax value in giving more to charity. So we're really an integral part of the tax community on the investment side. We talk to a lot of tax advisors. And a lot of those advisors in turn have been our advisors to finance and CRA. So what we're hearing is capital gains inclusion rate bound to go up. There is historical precedent, that's redundant probably, but there is, recognize that it was 75% for a long, long time before it was reduced to 50. So going back to 75, I think is not going to be a big jump. As we know, when you buy a flow-through share for $1, for tax purposes, it's worth $0. And even if you go to sell that share 5 years later for 20 cents, you're still paying capital gains tax on 20 cents. So if it goes from 50 to 75, it's going to go up, from 5 cents a tax to 7.5 cents, more or less. So let's look at that for a minute. This is the PDAC presentation. PDAC has done a brilliant job for all of us in presenting flow-through shares in its best light. And this is the after-tax cost of buying $1,000 of flow-through from province to province. Whereas Kendra said BC has tax credits, which means that when you write a check for $1,000, your tax value reduces the hold to $342. Quebec, which is the most progressive in terms of supporting its industry, is at $306. But that's not really the whole story, because you've got built into that is a capital gain. So while that may be your hold, what's the cost when you go to sell it? So the next slide is just picking 3 of the big provinces, which, BC, Ontario, Quebec. Ontario does not have a lot of tax credit available, unlike BC and Quebec. And so in Ontario, for example, the cost of $375 is on the PDAC chart is actually $513. In other words, today, if you wanted to break even after tax, you would have to sell those shares for $513. If the break even goes up, if the capital gains tax rather goes up to 75%, then we're looking at a 22-23% increase in the cost of ownership and break even. And the result, well, the break even. Now, if you think of a flow through offering with a 25% premium to market, it's going to come out of somewhere. And so you're going to start to see, with increased capital gains rate, you're going to see a decrease in premiums, and in our donation world, a decrease in the spread or delta between the subscription amount and the exit, which means, you know, financings will be harder to do. So what we've now done as of last night, no one signed on yet because nobody knows where it is yet, is a petition where we've asked for three things. One is, if there is an increase, minimally carve out and preserve the 50% inclusion rate. And the second and third things are to adopt two policies by Quebec that basically would be to the benefit of the entire industry. If you just go to PearTreeCanada.com, it'll be on our splash. It'll be on our main page sometime over the next little bit, or just sign up for Prospective, our newsletter to our clients, all of whom are deal junkies, talking about issuers that we've dealt with, that we're working with as part of just IR. So if you just sign up for that, you'll get a notice of the petition, and then we're going to ask you to distribute that petition around to your own networks through LinkedIn or other ones. Moving on very quickly, and I think, you know, it is very quick. On December the 7th, and you'll be able to sign on. There's no cost. We're going to do another seminar, another panel discussion. It'll be an hour and a half, more or less, maybe a little less. The panelists includes PwC and Thorstensons and the co-chair of the Finance and Taxation Committee for PDAC, talking about what we're seeing with respect to CRA and what their positions that they're taking. What we're seeing a lot of is IR company, you know, the IR department doing the, your IR person doing the press release or the news release, announcing a deal or announcing a financing. And they get it, everybody wants to put their best foot forward, and CRA does judge a book by its cover. So you'll often see companies get beyond where they really are at, and they talk about how they're, exploration and development, or, we have a mine, we just don't know how big it is. And CRA's administrative positions are a lot more aggressive than the law, and very few, if any, have taken them on. So, being aggravated by CRA isn't worthwhile. Winning ultimately is great, but the management time and the investor relations time in dealing with CRA reassessment is huge. And we help the issuers that we know, whenever we can. We've been very fortunate that we've had very few instances where CRAs come knocking, but in every case, we've helped our issuers work through those processes. But come back, look at December 7. Don't let, we always look at the press releases before they go out, at least we ask to ensure that that we're not accidentally going offside what might be perceived by CRA. You're spending real money in an offering anyway. Take it, have it read by your tax advisor. That's the headline. Before you, sorry, I think we're done. Before it goes out, so you can be satisfied that that you're not offside. So two things: the petition asking about the inclusion rate to be maintained at the current rates or better, as well as the December 7 presentation. And I got to end with, before any questions, again, we're looking for $150 million of flow through before the end of the year. So, call us. Anthony, I'm done. We're
Excellent
done.
stuff. Excellent
Seven,
stuff.
there
Ron.
you go. 7 minutes as promised. 8
True
minutes.
professional. True professional. Do you have a question here from the audience? Is the expected increase in capital gains inclusion rate a good reason for Saskatchewan, Alberta, and other provinces to assert jurisdiction over income tax administration in the same way Quebec has? Would this be a way to fix the problem?
Good luck. It ain't never gonna happen. That's a great question. Let's order dinner and we still talk about it. It's the start point. our start point in GR, and it's funny because in 2011 there was a change in the law that was unexpected, that had an impact on the charity on the charity format that we had originally developed. We had to go back to CRA and Revenue Quebec, and we had to add a second element to the plan, which they signed off on. But both taxing authorities said it wasn't us, it was finance. Finance doesn't like flow through. Unfortunately, flow through is characterized by many as a gift to the rich. They're not going to give up jurisdiction, and finance will say to the minister, "Oh no, we can't do that. We shouldn't see an expansion." And it'll be, you know, what in the perfect world of finance, there'd be no incentives and there'd be lower tax rate. But it's yeah, if you can assert it, great, but it's not going to happen.
Okay. In terms of the petition, what are you expecting to achieve? Not all petitions actually have an impact. Why do you think this one will be different?
I think, you know, when you look at some of the commentary that's come, that's a good question. If you look at the commentary by folks especially on the NDP side, there is a lack. They've bought into to a lot of the rhetoric that somehow this is again a gift to the rich, as opposed to the single most important way to finance jobs in the North and assert a sovereignty in the North and in Indigenous communities. We around this table, all the people that are on this call, know this extremely well. We know that $1 of deduction in Toronto is $1 of inclusion in Timmins. I mean, you're writing off something in Montreal, and your high net worth is writing a check in Montreal, for the Abitibi. We all know that is a reality. That's not the perception. So we've hired government relations counsel. If you think lawyers are expensive, this is even sillier. So we're not worried, but we're worried enough, and we're gonna take the petition. We're gonna ask then people who sign the petition to also contact their own members of parliament and their own northern caucuses, especially. And we're going to go talk to we're setting up meetings to talk with the NDP and with the Liberals and with the Conservatives, so that they can just recognize that, you're really $1 of flow through is largely made up of labor, and holistically that the flow through regime is in balance. We tried to prove this in 2013 after the change of law. We hired Deloitte. And in hiring Deloitte, we proved that we can get the cost down, but we couldn't get full disclosure. It's actually on the petition as a template. The last time we presented this to finance, they said, "Don't tell us our business." They really, in our perfect world, we would have a buy-in by government that we need to have policy based on evidence. So evidence-based policy is a catchphrase, but I think it's once the narrative is out there, and if you spend enough time doing it, I think we stand a relatively decent chance of championing the cause for all of us around the table.
Excellent. Well, Ron, you have a track record of getting these things done. So I hope the wind is at your back, and I have confidence that you will. I thank you for joining us. It's always a pleasure to hear you speak on these important matters, and we look forward to visiting with Lisa tomorrow. Have a great rest of the day, Ron.
Thank you. Good to see you again, Anthony. It's been
likewise. Cheers.
Delightful. Thanks. Bye.
Bye-bye.